thing to stop and then okay, all right, we are live, sir. All right, Tom, if you're ready. Oh, and also before we get started here, and this was probably live as well, but you usually provide some like credit union examples. Do you have any of those this time around, or one or two?
Yeah, I can give you a couple.
That would be
Absolutely.
awesome. Okay, cool. All right, well, that said, let's dive in, shall we?
Let's do it.
All right, here we go. 3, 2, 1. Hey, everybody. Mike Lawson here with CU Broadcast. Welcome back to our program. And we are live today with Glatt Consulting's very own Tom Glatt. Tom, how are you, sir?
I'm very good, Mike. How are you?
I'm doing great, doing great. Better now that you're here and we get to hear the latest Credit Union HealthScore, what's going on out there. But before we get into that, for those folks who might, those one or two people out there who might not know what the Credit Union HealthScore is, can you give us a quick refresher on what it is and what you guys look for?
Yeah, it started back in the midst of the Great Recession. Back a few years ago, we were asked by a client to help them find a healthy credit union to merge into because they had, while they were facing all the major changes or problems that the Great Recession brought up. They were in the Riverside County area. Property values back then declined 40%, and they saw dark clouds on the horizon. So we created a very rudimentary score system for them to help us determine healthy credit unions. And since then, have kind of morphed it into 17 different components we look at and evaluate for the purposes of determining basic health and performance in the credit union community. So we run it every quarter when we get credit union call report data, and it helps us understand movements, again, of performance in the industry.
Okay. And you don't have to name all 17, but can you share maybe a couple of those categories that you look at?
Sure. Yeah, we look at things that are typically tracked by most credit unions. We're looking at net worth. We're looking at earnings, return on assets, operating expenses, efficiency, credit quality, delinquencies, charge-offs. We're looking at the deposit and lending relationships, tapping the borrower population and the credit union membership. And then we look at growth, loan growth, membership growth, asset growth among the 17. Again, basically things that credit unions are either looking at or trying to facilitate movement in at their own institutions.
Right on, right on. And so let's dive into the latest round because I think we've broken a streak this time around. So can you give us the latest? What's the most recent update that you have for us?
Yeah, we did. We broke a streak, and the streak was that we were seeing successive quarter after quarter improvements in score, which was interesting given the fact that we're going through this sort of lingering COVID pandemic, an overhang, if you will, for the credit union community. But the score itself dropped 0.92%. Not very much. In other words, you could say we just about held steady from for year over year as compared to last quarter or last year. But again, it's notable because it's the first decline that we've seen since the first quarter of 2020, which was right kind of before COVID when that started hitting.
Yeah.
In fact, on that note, I think I remember talking to you saying, I think this is going to be the beginning of a downward trend. And I was proven wrong.
It didn't happen. I know.
Quarter. Didn't happen. And then prior to 2020, I'm looking back to numbers back through 2016, which is
that was the real streak right there.
Yeah, there were no reds. So this is notable in the sense that we dropped the score by a small amount. The score itself, by the way, is 6.215. And for those that are unfamiliar, we run with a score of 0 to 10, with 10 being high health, high performance, 5 being the benchmark, which we set doing a correlation study of credit union performance over about a 20-year history when we set that. So 5 is benchmark. So credit unions are above the benchmark by a long shot right now.
So what do you attribute the decline? I mean, is it just, what's going on in the economy right now, or what's going on in the world right now, or what do you attribute it to?
We see a few things that are contributing to the decline, but they're all related to that asset growth that we saw as a consequence of all the stimulus funds coming out of the pandemic, right? So where we're seeing large declines in the score is an asset growth, which makes sense, right? We're, as compared to when we were getting an influx of funds, we're not seeing that much money come in anymore. So asset growth, that score is down 32%. Consequently, scores for cash and short-term investments, which is one of our 17 components, is down 16%. And that makes sense. Interesting note on that, which I think I have a prediction for later on, but credit unions, the loan growth is picking up. That's a positive, but it's pulling cash out in addition to the fact that we're not seeing much cash growth
Yeah.
as a comparison. And the other two components, it's only 4 that declined, but the other 2 components were solvency, which is, you liquidate all your assets to pay off your liabilities, and what you have left presumably will cover the shares that you need to pay back to members. So solvency is that measurement. We're seeing a slight decline in that. And then after 4 straight quarters, we're seeing decline. 4 straight quarters of improved scores, we're seeing declines in membership growth, which I don't like to see any time, but that one declined about 8% year over year.
Okay. Gosh, yeah. Some interesting numbers there for sure. So the impact of the recent economic challenges, I mean, what's that on credit union performance? Because obviously there's low unemployment, the inflation, a number of other factors in there. So what's your take on that with the performance?
Yeah, we got a couple things we're thinking about, right? One's inflation, of course, and the other is the low unemployment rate and the rising costs of operations for all kinds of businesses, credit unions included. So what I look at to try to understand where we're seeing pressures on operations from environmental factors is where the scores relate to that 5-point benchmark, right? So where do we see scores below 5 right now? That's what I want to pay attention to if I'm thinking of impact and thinking ahead. So return on assets for credit unions, the score is below 5 by about 0.5, right? So we're in that kind of uncomfortable range where, from a return on asset standpoint, the industry is not making as much as it has historically. That's a low rate environment factor, but it's also a factor of rising costs. Consequently, efficiency, which is one of our metrics, we're looking at how much credit unions spend to make $1 of income. That one is also below 5. And then 2 of the growth metrics, we already mentioned membership growth, but that by itself is below 5. And loan growth remains below 5. It's been below 5 for quite some time. It was in the 2s, which was kind of uncharacteristic, of course, when all the lockdowns were occurring for the pandemic. But right now, we've got a loan growth score of 3.95. So to answer your question, I think the pressures we're facing right now, when you think about inflation, rising rate environment, its impact and effect on loan growth, means that I don't think it's going to be easier going forward for credit unions to manage the kind of the health and performance of their organization as easily as it has been over the last few years. And granted, people will hear me say easy and would maybe be offended by that. But I think it's going to be a lot harder, because how do you make money when loan growth is sort of being compressed, when consumers are going to start running out of excess funds to spend on goods and services? And ultimately, you've got a lot of competition for membership growth. So I think it's going to be a challenge. That's where I think we're going to see the impact of this economy on credit union performance in the future.
Yeah, we were riding so high for such a long time, because I remember bringing you on quarter after quarter after quarter and say, hey, more good news. And all of a sudden, but you're always kind of like waiting for that shoe to drop, so to speak. It's like, gosh, when are these good times gonna come to a close? Not that they aren't, but I mean, we're still in performance areas. They're still doing really, really well, but this seems to be a bit of a check swing, if you will.
Well, case in point, the scores for delinquencies and charge-offs are in the 7. So delinquencies 759 and charge-offs are 799. And mind you, I'm looking back to say 2019, 2017, 2016. Those scores were ranges from the low 5 to 6, 6.5. So we're well above in our score for delinquencies and charge-offs. So unlike the ratio itself, the higher the score, the stronger we are, right? So we do not have a lot of credit quality problems. But with all the factors you just rattled off and the challenges we face and what we're thinking about, those are probably 2 areas where we're going to see score declines as rates go up and people find it harder to afford making loan payments on time. And just one little piece of anecdotal evidence to that effect. There's a chart tracked or data tracked by the government, by the Fed, consumer debt service payments as a percent of disposable income. Not too long ago, they were about 4.8%. They've gone up to 5.4%, and that's data that's a few months old. So we're seeing, more and more of a consumer's paycheck eaten up by debt payment costs. At the same time, we're seeing costs for gas, food, clothes, so on and so forth go up as well.
Don't
And
remind
God
me.
bless you. You live in Southern California. I can't imagine
Yeah.
what you're paying for gas right now.
Oh, I paid $6.39 a gallon the other day. Woohoo!
All right.
And I
And
drive an
I'm sure that
SUV.
was for premium gas too, right?
Oh no, that's the bottom of the barrel stuff. We're scraping the crude,
That's
the
right.
gunky stuff out. Yeah, that's you don't even want to know what the good stuff is. So
I
yeah,
can't
I
imagine.
had to run down to my credit union and get a loan to
That's
fill up my
right.
tank. So my credit union's
Gas
benefiting in
loan's
that
great.
area. But anyway, I digress. Yeah, so usually you provide maybe a couple of credit union examples of what's going on out there. Some people, some standouts, or maybe some folks that might be experiencing some challenges. So do you have one or two of those that you can share?
Yeah, so there are a couple that tend to be at the top. Sycamore, I think we mentioned them before.
Mm-hmm.
They're in Alabama, 12 employees, single branch, about 45 million in assets. They've got a score of 9. So
Wow.
for them, their return on asset score is 10. As I mentioned, the industry
Yeah.
is below 5. They have
Yeah.
a
Yeah.
2.68 return on assets. It's amazing. And they've had, I think their loan growth last quarter was 17%, and they had a 10% membership growth rate.
Wow. Well done on
Hardly
them.
any charge-offs and delinquencies. Um, so when you see a lot of that industry commentary about small credit unions struggling, you look at these folks who are number one on our list, and they figured it out. So
What's their size?
it can
Do
happen.
you have their size off the top of your head? Are there?
Yeah,
Or
45 million,
wow,
2,517
wow.
members as of last count. One that did pop up that I haven't seen before on our list is Highway Crossroads out of Sykes-Town, Missouri. It's
Mm-hmm.
another small one, 20 million in assets, 1,900 members, and they've scored 8.82.
Wow,
And
that's
another
good.
one that kind of popped up on the leader list here at the other end of the size spectrum is DatQ out of Denton, Texas. They're 1.5 billion with 102,000 members,
Mm-hmm.
197 branches. 197 employees and 12 branches, and
That's
they're
a lot of
scoring
branches.
8853. And
Okay.
kind of like Sycamore, they've got an unparalleled return on assets, 1.41, 7% membership growth, 24% loan growth. So
Mm-hmm.
you're seeing some really good stories there in credit unions of all sizes. They just have found the right way to tap into their market and serve their members well.
Yeah, I'd love to know the secret sauce, what they're doing. Maybe we'll have them on the show. How about that?
You should, and
I
I
would
would
love to.
bet you that it's probably nothing secret. They're probably just
Yeah,
managing to solid, sound principles, and
exactly.
sometimes that's really what gets you through the tough
Yep.
times and shows you the path to great success and good times as well.
Mm-hmm. Stick to the basics, sir. Stick to the basics for sure. Hey, before I let you go, oh yeah, where can we find? Oh yeah, usually my last question. Where can we go to find the latest Credit Union HealthScore? Because we're just scratching the surface here for sure.
Yeah, glattconsulting.com. You can get
Mm-hmm.
our quarterly write up, which is just a summary. But any credit union professional, be they a staff member or a volunteer, can subscribe to get a quarterly report for free. They come as PDFs. So if you've got some viewers now that aren't subscribed, all they've got to do is go to the website, look for the Health Score link, and then there's a subscription button there,
Cool.
and we'll run the report for you.
Right
So
on.
you'll see not only the industry trends for your own credit union, but you can see who's leading in your state, in your asset peer range, and
Mm-hmm.
then we create kind of a local. We estimate a local market, looking at SMSA and the state you're in to try to give you a sense of what other
Yeah.
credit unions are doing around you. So yeah, all that comes free with the report.
See, what I love about that is that you can look at this report and see who is really performing well, like the credit unions that you just named. And if you're a credit union leader out there, like, gosh, what are they doing? And you can just give them a call and say, hey, what are you guys doing that is causing you guys to perform so well? Any tips or anything like that? I mean, collaboration is the credit union superpower, as we have all said for many,
That's
many
right.
years now. So that's a great way to like see who's performing really, really well and go, gosh, I wonder what they're doing. Call them up and see and find out. I'm sure they're happy to
Right.
share.
To your point, I mean, we don't have to wonder because credit unions still are so freely giving with information
Yeah.
on how they think about member service and member relationships and delivery and what have you. So yeah, use the report to create kind of
Exactly.
a connection list, a
Exactly.
networking group or what have you of institutions that are high performing. And again, this is one data point in many, but I think it gives you a pretty good perspective of what
Exactly.
individual institutions are doing and doing well.
Yep, it's a great barometer for sure. All right, before I let you go, you have some personal news here that I just found out about, and I'm very impressed that you and your son just climbed Mount Kilimanjaro successfully, and you're back here. You're back in the States, and you're here to tell about it. So, I mean, give us some quick highlight. How was the trip? I mean, how was the trip? My gosh, sound like you're going to Cancun. No, how was the hike or the climb?
Yeah, it was, yeah, right. It's people ask, is it a technical mountain? Do you have to have skills with ropes, and are you climbing, ice crevasses and the like? It's not a technical mountain. It is a hiking mountain.
Okay.
But that said, that hike is to 19,000 feet and change. So it's not an easy hike by any stretch of the imagination. So for me, you probably know this, but I just turned 50 on May 3rd. So this was not only an opportunity to go do something fun with my son, but also one of those, benchmarks in life experiences where you go, man, can I still put one foot in front of the other at this age and make something good happen? But it's an amazing experience, very difficult. Just to give you a taste of it, the last night, right, when you're heading for the summit, you get up at 11 p.m., you eat, which I had a hard time eating at that altitude. And then you start climbing to reach the summit, or at least a place called Gilman's Point by sunrise.
Right.
And that was really hard. That was really hard. But man, when you get up there and you see that sun and you're above the clouds, and it's quite an amazing experience. The hardest thing I've ever done, and glad I did it. And when you finish, you go, I kind of want to do it again. So we'll see what happens.
He's addicted, ladies and gentlemen. Yeah, it's one of those things where it's such a struggle, a challenge to get to the top. But once you get there, you're like, oh, that was really worth it. I mean, the reward, just like you said, seeing that sunrise, just got to be, there's words probably can't describe.
Well, and I'll tell you, the words you used to talk about credit unions a minute ago was collaboration. The group we went is called Alteza Travel, and there are lots of different companies you can use to help get you to the top. But these folks really help you succeed. And I'll give you an example. Like I said, it was a struggle. About halfway up the climb on that summit night, one of the guides or porters grabbed my bag and carried it for me.
Oh, wow.
So I wouldn't have made it up there without that, because that little bag, which seemed to weigh nothing at the base of the mountain, felt like it weighed 200 pounds by the time we got up there. But those are the kinds of things that people will do there, that do this all the time to help you find success. And it's a great anecdote and an endpoint to your comment about collaboration in our credit union space, and how well that does help people succeed and find new paths to individual and company success.
Indeed. Yeah. Which brings us back to the HealthScore, that you can certainly use to kind of measure what's going on in the industry. And again, if somebody's performing really well and you're experiencing some challenges, you can call that credit union up and go, hey, hey, what are you guys doing? So yeah, I totally get it. Get it. Well, congratulations on that, Tom. I mean, that's no easy feat, because I've known a few people who have done that, and they each kind of echoed what you just said. It's like, oh, it's a little bit different than I thought. It's it's not an easy thing to do, but once you do it's really well worth it. So good stuff. Congrats, sir.
Well, I appreciate it.
Yeah. No worries. Alrighty. Well, I will let you get back at it, because you always have a full plate there at Glatt Consulting. So we always appreciate your time and the update that we get on a quarterly basis. Always enjoy this to see where we are as an industry. So keep up the good work, sir, and get some rest. Cool. All right.
Yeah, thank you. And you keep up the good work as well, Mike. Always good watching what you do and who you interview and the insight you guys provide. So thanks for all you do.
Always glad to do that, for sure. Always glad to deliver that message out there to everybody. So good stuff. Alrighty, sir. I'll let you get back at it. Thanks again, Tom. And congrats again on making that summit. Well done.
Thank you, Mike.
You are welcome. And that is